I'm Tim. I've been helping people better understand their money for getting on for 20 years now. And perhaps unsurprisingly, it's incredibly busy right now. And I get asked to do a number of these types of talks. And it's always nice to be able to plan in advance what you're going to say. But with money being as volatile as it is right now, that's proving increasingly difficult. So it was 4 months ago that we signed up for this event. And if you think back over the last 4 months, we've had 4 different chancellors. We've had 4 rises to interest rates. We've had the announcement that the interest we're now paying on our national debt is the highest since the 1940s. We know that unemployment is going to rocket and smash through 4% early next year. So I'm sure you can all resonate with this statement about times of change. You know, we are very much now in times of change. And I think the fact that you're in this session is also encouraging that you'll hopefully recognise the need for financial resilience at this strange time as well. And I think, all of this change, all of this volatility is leading to very tough times ahead. Our costs are going up, fear of redundancies looming. So even amongst my friendship circle, I've got friends who've worked places for 20 years and they're now out in the market looking for another job. We heard in the autumn statement last week that our taxes are now risen by £55 billion. Our savings are going down. So I'm not sure if anybody's dared look at their pension statement recently. That's not great viewing. And actually, I was chatting to somebody earlier this morning, and they were saying that they had run one of the breakfast sessions, and to his surprise, there were 3 mentions of pensions in terms of people's focus for next year. So, it's interesting dynamic there. And I think this is all to a backdrop of this general trend of money is becoming more complicated. Not necessarily everybody's going to be entirely pleased or necessarily agree what I'll say here, but the financial services industry like money being complicated. The more complicated thing is, the more opportunities there are for them to make money. So we've got this backdrop, things are getting more complicated, things are getting more expensive, and because of the breadth of change and what we're seeing, none of us aren't impacted by this. It's all encompassing. And I think this recent quote from Jeff Bezos really brought it home for me. So if the billionaire Jeff Bezos saying it's time to batten down the hatches, then what chance is there for the rest of us? There'll be a couple of more references to Amazon throughout the session today, and I think people know this and they're anxious. So we run lots of research. Our kind of showpiece is an annual research published in May each year. So this data comes from May earlier this year. And as you can see here, people are feeling anxious. And this isn't just a UK problem, although it is heightened in the UK. But this is very much a global problem. But I think encouragingly, as we can see here, and unsurprisingly, people want help. And I've been running Nudge for 8 or 9 years now, and I remember when we set the business up, there was a big piece of research from Barclays that everyone referred to called financial wellbeing, the last taboo in the workplace. I'm sure a number of people have seen that. And I think the encouraging thing is, I don't think it is a taboo anymore. The fact that so many people are asking for help, the fact that so many organisations interested to work out how they can help people with this type of topic. In terms of where people are looking for that help, it's very, very natural that they look to their employer. I'm not sure if anybody's familiar with the Edelman Trust Barometer. It's quite an interesting resource. Again, it's an annual piece. I think it's published in about January each year. And there they rate where people, who people trust and where people are happy to kind of get support from. Unsurprisingly, government. People don't trust the government. People tend not to trust the media. Not as many people as used to trust their banks or their insurance companies. So as an employer, you're in a unique position. You have a unique bond with your people. So it's very, very natural that they would look to you for that support. But you're limited as an employer what you can do. Some pretty strong headwinds there. You can't increase pay in line with inflation. So we've recently been through pay rises with our team. We've got a team of about 70 people now. And they're reading inflation's at 10.1%, and there's a gap between that and how much we can afford to pay them. So we can't keep pay rises up in line with inflation. We can't top up the stock markets, top up the FTSE. We can't hold back those headwinds or even stave off some of those redundancies. But there is actually one thing that we can do, and that is about helping people build resilience. And you may have noticed on the intro slide, I referred to resilience of employees and employers. And so I'm just going to take a few minutes to talk through a bit of detail for each of those. So there's a slightly different, I think when we talk about resilience, there's a slightly different meaning from that employee perspective and employer perspective. I think from the employee's perspective, there's two parts to resilience. The first part is about their mindset, and the second part is about then actually enabling people to take action. Now, if we start with mindset, you look at the Oxford English Dictionary definition, it's the established set of attitudes held by someone. And I think the key word there is established. It's not easy to change somebody's mindset. But what we've learned, and there's all sorts of people investing lots of time in this, is that if you really understand how the human mind works, you actually can influence the way that people think and the actions that they take. And I guess the collective name for that is nudge theory, which you won't be surprised to hear is a big influence of us as an organisation in terms of our name and a brand. And so, what we've seen is that, broadly speaking, people are in a fixed mindset when it comes to their money. It's another stat from that research we run was where people currently rely on support from, and 70% or thereabouts of people are currently relying on their family. Now that's great if your family, if Martin Lewis is your uncle, but the majority of us don't have that situation. And so there's this real kind of cycle where we make the same mistakes that our generations before us made. And so, it's really difficult to kind of crack into that and break that cycle. So one of the ways that we've seen organisations doing that is through our solution, and specifically we have a story, a building financial resilience story. And so we launched that about a year ago now. And so a story is a sequence of education about a particular topic. And in this case, this sequence of education is about building that short and long-term resilience. And what we've seen is that this story is the fastest growing story over the last 3 months. And I think that talks to those 88% of people who are feeling anxious and want help. And also supporting that point that this is no longer a taboo subject. People are taking it upon themselves to try and improve their situation and build that resilience. So that sequence of education starts with a financial wellness assessment, so to check somebody's resilience, and that's really broken down to how well resourced they are to deal with a shock, what's their attitude with regards to money, and then what are their actual behaviours. And then from there, it's about helping them understand that they need to review their budget, perhaps prioritise their debts, building an emergency fund, engaging with family and friends. It's amazing how many people, although they're relying on their family for support, actually are quite self-contained when it comes to a problem. So an open dialogue is a really, really important part of building financial resilience. And then so what we're able to do through tracking and comparing how people are using this tool and how their behaviours are changed from their interaction with employee benefits, we can see that changing mindset. So we can see people building better resources, changing their behaviours, and ultimately adopting new attitudes with regards to money as well. So let's say from an employee's perspective, there's two parts to resilience. There's that mindset piece, and then there is about action, people being able to take action. And so you've changed somebody's mindset. That education and influence then needs to feed through to actually leading to action, so applying that learning. And this is where other benefits come in. So not only are you as an employer in a unique position in terms of that relationship that you have with people, you're also in a unique position to be able to change them because of all the other stuff that you do. And I think Steve will talk a bit more about how you can perhaps take this to the next level when we hear from him shortly. So 71% of our clients, in fact, say that driving uptake of their other benefits is their top proof point in terms of the return on investment and demonstrating the value that they're getting from a program like this. So for one person, as a result of that financial resilience story, it might be about learning that they need to reduce their spending, which is where your discounted shopping scheme comes into play. For someone else, it might be around getting certainty from remortgaging. So, for example, myself, I've recently increased my mortgage payment, but I've now got the security that I know what I'm going to be paying for the next 5 years, rather than the spectre of, God knows what it's going to be in a year's time. For somebody else, it might be about saving up an emergency savings pot. And this isn't something I've seen a huge amount of here in the UK yet, but we do a lot of work in the US, where the fastest growing employee benefit is an emergency savings pot where people can contribute directly from salary. Or it may be help with caring for those people, a huge number of people who have caring responsibilities. I think that the point is everybody's need in terms of what's going to influence their financial resilience, everyone's needs going to be different. And so it's about having a broad suite of employee benefits to talk to each of their needs. And in times of chaos and concern and uncertainty, people need structured support to be able to build that resilience. And that's where, as an employer, you're able to, through your employee benefit provision, provide that structure. And so then combining that education with the fulfillment, what we can then do is really start to build that resilience. So if we then think about resilience from an employer's perspective, I guess in short, what our clients tell us is that they want their programs to not just be fit for purpose now, but they want to be agile enough that they can change with the times. And I think there's a couple of elements to that. It's not only an individual employee's circumstance changing. Maybe they join you as a graduate and then they get married, buy a home, have children, and obviously their circumstances change. But it's also the changing dynamics of an organisation as well. So I remember speaking to a big bank a few years ago and talking to them about their culture and what they did. And then 3 years later, when I spoke to them, they had completely repositioned themselves as a tech company. They said 50% of our people are working in tech. So it's about having a program that changes as people's needs and as your organisations actually change. And so for a lot of organisations, they recognise that when they step onto this journey, this financial education, this financial wellbeing journey, they recognise it's exactly that. What they need now is going to need to be different in the future. They need it to evolve. They need it to change. And if you achieve that, it means that you've always got a topical, a relevant, and ultimately an impactful programme. And to achieve that resilience and that evolving programme, you need two things. Firstly, you need live data. You need live data that is that barometer for where your people are at. What are their needs? What are their challenges? And at Nudge, we call that nudgeonomics. And I know there's a few clients in the audience today, so they'll be familiar with the insight that we can provide through that nudgeonomics. But it's about trending how people's needs are changing over time. And that becomes really powerful when you then start to overlay that against other organisations. So you hear that 30% of your people are learning about debt, until you know that actually across the other clients it's only 10%, it doesn't really have any context, any relevance. So it's about becoming a lot more in tune with your people's needs. Where we're heading with this is predictive nudgeonomics, predictive analytics, and this is my second reference to Amazon. So when we were setting Nudge up many years ago, I was changing my son's nappy, and it occurred to me that Amazon always knew when I was going to run out of nappies. They knew I was going to run out before I knew I was about to run out. And what we're trying to achieve is something similar here. If somebody's learning about this topic in April, based on the 2 billion pieces of data that we've got, what are their needs going to be in June or July or September or October? So you can get on the front foot and you can make sure that you've got the relevant products and services and benefits to support their needs as those needs come up. The second element that you need for that employer resilience is around the structure that allows you to change the support as the nudgenomics tells you you need that change. And I think there's a couple of parts to that. Number one is having the autonomy and the trust and the confidence from your business. If you see that there's a growing need for a particular product, you can't really afford to wait for the permission to get the budget to buy that product, to go all the way up to the board and back down, and then you wait 2 years, and before you know it, the problem's changed. So it's about creating that relationship and that confidence, with the organisation to be able to act as you need to. And then the second element is around having that ongoing dialogue with people, that financial education as we would deliver that. So when you do launch these new products and services, people understand. They understand what the solution does, what the product does, how it can impact them, and ultimately how to make the most of it. And do not underestimate how people's needs change. If I think back to COVID, January 2020, people were learning about everyday finances. Then we were obviously plunged into lockdown. We saw a huge spike in people learning about government support, and there was a real rise in people learning about anxiety and how to deal with anxiety. We then, as people then got into the rhythm of spending less, we saw people learning about spending, what people were able to do. As I'm sure you're all aware, there was a big investment bounce as people started to invest more. We saw that, and then really sad, by the time we were back into the next lockdown that Christmas, we then saw a surge in people learning about family finances. So these things change very, very quickly, and we're anticipating the same over the course of the next year or so as the current crisis that we're in pans out. So, as I say, in summary, that employer resilience is about having an evolving strategy rather than predefined products. And this isn't easy, but we've done it lots of times before. So if you want any guidance on that, please come and see us at Stand 29, and we've got lots of material that we can talk you through that. So we've got a couple of minutes left for questions.